All right, for all you Bitcoin fans, I've got a overnight system for you off a 10-day moving average. I know there's a lot of enthusiasm for Bitcoin. Your exuberance, though, is my headache. Not complaining, gonna do it for you anyway. Why does Bitcoin cause headaches? Well, for one thing, Bitcoin futures have no defined day session. We're arbitrarily going with the S&P futures day session of 8:30 a.m. to 3:15 p.m. Central Time parameters. And an even bigger problem is there is no happy medium futures contract, one that reflects the same 1 point equals $1 value of the Bitcoin cash market. For some reason, the exchange decided it would be really a good idea to make the futures contract 5 times the value of the cash. 1 point equals $5, 100 points equals $500. But you can go in the opposite direction. They do offer micro contracts, which are worth 1/50th the value of the full size contract and 1/10th the value of the cash Bitcoin. 1 point equals 10 cents, 100 points equals $10. With me there? We'll soldier on here. But unfortunately, it'd probably be most convenient under the circumstances to give you micro Bitcoin results, and you can do the multiplication from there on how many contracts you want to hold. But unfortunately, micro Bitcoin futures do not register back testing values. The increments aren't big enough for a TradeStation to record anything but zero for all prices. So that's not helpful. We're therefore stuck with the full-sized futures contract, understanding that we'll be dividing performance values to get to normal trading size. To trade the value of the cash market, we would divide what I'm going to show you on the average net profit, the average trade, and the worst drawdown by 5. Things like return on account aren't going to change, obviously, since they're relative. To trade the value of one micro contract, you divide the following net profit, average trade, and worst drawdown by 50. All right, so here's the rules. Custom set your chart to daily bars, day session, 8:30 a.m. to 3:15 p.m. Central Time. The first time in which the close is above its respective 10-day average close, counting today, for 2 days in a row, go long at tomorrow's open plus 10% of today's range at a stop. The first time in which the close is below its respective 10-day average close for 2 days in a row, go short at tomorrow's open minus 10% of today's range on a stop. Hold the trade overnight and exit on day 2 in one of the following 3 ways. You've seen this technique before in several of my systems. We're looking to exit at day 1's best price, day 1's high if we're long, day 1's low if we're short, on a limit order. We're setting a stop on day 2, 1 tick below day 1's low if we're long, or 1 tick above day 1's high if we're short. And if neither side is hit, we're exiting at the 3:15 p.m. session close. So, again, 10-day average in purple here. You have a close under the 10-day average, followed by 2 closes above it. Go long the next open. Here you have a close above the 10-day average, followed by 2 closes that are below it. You go short. Okay, on the full-size mega futures contract, this actually goes back part way in 2018, okay? And netted $196,000 off 164 trades, 56% were profitable, 1,196 Dollar average profit, $40,000 worst drawdown, 490% return on account. Okay? You probably don't want to trade this size. Divide it by 10, you would have made $19,000 with an $8,000 drawdown. Same return on account. That would be if you traded 10 micro contracts, which again, I can't show you individually because they don't register value. Okay, hope it was worth it. Other good ideas in beating the financial futures market, the 2021 Almanac. Reach me at art@artcollinstrading.com. Thank you for joining me.